In the residential real estate market, I think the opportunity is clear. We're looking for days on market over 30. We are looking for non-perfect properties that are somebody needs to sell versus wants to sell. But that's residential. I'm curious where the opportunity is today in commercial. And to have this discussion, we're going to bring on the one and only Jonathan Twomley. So, Jonathan, where's the opportunity today in commercial?
Everywhere.
I love it. I love it.
The opportunity is everywhere, but you've got to ferret it out,
All
right?
right. Tell me more.
So, so listen, we are in a situation now where it is hard to sell property, right? And because it's hard for buyers to get the debt on the property.
Okay.
So what that means is that prices have fallen by a lot, right? And there are also a lot of sellers who are either in distress or getting close to distress. When you have a situation like that, it always favors buyers who have access to capital. Right. And so, and we've got, a lot of pretty much every asset class out there, maybe with the exception of like industrial or, I don't know what else, retail strip centers seem to be doing pretty well, right? The old mom and pop type ones, right? But other than that, you've got distress kind of across the board because people bought or they refinanced at the top of the market and now they're really in trouble, right? And so there are deals where lenders are willing to take a haircut to get these properties moved along. They're not performing, right? So the issue is really just finding them. But I think they're all over the place. And when you were talking about 30 days on market, things like that for residential, I think you can get on the commercial sites as well, like Crexi or LoopNet, and see properties that have been sitting there. I mean, I'm looking at properties that have been there for a year, 2 years. And, could be a seller who's just stubborn and they don't need, they're holding out for their price, even though like, the market is continuing, getting less and less likely. But I'm starting to see a few assets where they're making substantial price cuts, which means that that's a seller they're serious about exiting the property and they've lowered their expectations. And a property like that very likely is going to be one where they're going to be open to seller financing because it's really the only alternative, right? So I would say that if you're looking for commercial properties, get on Crexi, get on LoopNet, and start looking for those properties that have been sitting there for a while, and don't be put off by the asking price.
Exactly.
You underwrite the property and offer what you think it's worth. And so a little sort of trick about the commercial market is that, so when you have a house for sale, there's always a price, right? There's always a price, an offering price or an asking price for the house. In the commercial market, whether the property has a price attached or is unpriced is a signal to you about where in the market cycle you are or what is going on with this asset. So now here's the trick. In a very hot market, in a seller's market, you will see commercial property unpriced, right? And that is saying, hey buyers, you come up with a price and you bid. And the reason that they don't put a price on the property is because the brokers are worried about accidentally capping the bids that they get by putting a price on it, because people will be anchored to that bid, that price. So they won't go too high above it, right? Because they'll think, oh, well, that's how much the seller wants for the property, or they may not go above it at all. They may stay under that price. So they intentionally, keep it unpriced, and so that the hope being that the market will bid it up to some crazy high. And so when the market is strong, you'll never see a price attached to anything. The only time you'll ever see a price attached to something in a hot market is when there's something really wrong with this property and they've tried to sell it and it's not selling, and they stick a price on it to try to do the opposite, which is anchor you to a high price. Now, in a buyer's market like we're in now, you'll see a price on almost everything. And the reason for that is because the brokers are worried in the opposite direction, that if they don't put a price on it, that when you underwrite it, you're going to underwrite it really low, right?
Correct.
And so what they're trying to do there is anchor you to this higher price, so that even though they know you're going to underwrite it lower, then you're going to start negotiating with yourself and saying like, okay, I only value this at 3, but they're asking 4. I don't think I'm going to get it. It's a way of kind of like maybe reading out some lowball offers, or also making you think, okay, well, maybe I'll stretch this to 3.5, which is
Right.
like what they want to happen,
Okay.
right? So if you see properties on LoopNet or Crexi or wherever that have a price attached to them, that's a signal to you that you should not pay that price, right?
Mhm.
That's not the price you should pay. You should pay lower than that price. And what may well happen, and then this is when the timing comes in, right? If it just came on the market, you're not that likely to get much of a discount off of that price, but you should still put in the offer at the price you want it. Why? Because everyone else is going to be putting in the price that offers at the price they wanted, or no offers at all. And the seller is eventually going to come to reality. And then the brokers may come back to you and say, hey, is that offer still open, right,
Right.
for this property at the price you want it? And if a property's been sitting on the market, like I said, for a year or more, and especially if you've seen price cuts, like that's telling you the seller really wants to move this property. So make an even more lowball offer, right? I mean, make sure that you are offering what you really think the property is worth. But that's a huge tell when you see a price on a commercial property.
Yeah, and again, I love the idea that opportunity is everywhere, because we saw some interesting shenanigans the last couple of years, and this is even for the small stuff, right? This is not the monsters. It's the 5 to 40s. It's the little three store retail strip mall. There's opportunity everywhere, but you got to be creative. You got to do the work. You got to know your numbers. This is, as Patrick Bet David says, disrespectful offers. To your point, don't do that on first day listings. That's not cool. Wait, but do the work, know your numbers. Don't get anchored on a price. Understand seller financing could be first or second position to help get a deal. I just think there's a lot of opportunity coming, and people need to realize now's the time to do the work. I mean, the last
Yeah.
couple of years it's been rough for guys that are conservative.
Yeah. Oh, yeah. I
Uh,
mean, it was terrible for the last 5 years for me,
yeah,
right?
yeah,
Because nothing made sense to me, and I wasn't willing to take on all that risk. And I'm not happy to say I told you so, because there's a lot of
yeah.
people.
I
I
am.
mean, honestly,
I got receipts, man. I am
listen,
happy about that.
some of my investors are now out because they invested with other people who
Yep.
overpaid, and now
Yeah.
they're like burned now.
Not doing that again. Yep.
So it still hurts me what these other people did, right?
Yeah.
Um, the so I'm not, it's not one of the situations where I'm glad I'm not dealing with it, but I'm also like, who wants to be right under those circumstances? Didn't really help me that much. But anyway, I just wanted to return to seller financing. Like, seller financing is also a huge opportunity because, and I'm sure you talk about this too, but you can go to a seller and say to them, hey, look, if I have to go to a bank and pay 10% interest, right, for this office building or whatever it is, I can only pay you X because this is how
Yep.
much NOI is coming off this building. I've got to meet this DSCR,
Yep.
and
It's
how
just
much
math. It's
it's
just
just
math.
math. Or if you give me seller financing, I can pay you more. And
Yeah.
somebody said this really well the other day on LinkedIn. They said, um, if you give me yesterday's interest rate in seller financing, I'll pay you
Ah,
yesterday's price.
there
But
you go.
if
I
you
love
want
that.
if you want today's interest rate, or if I have to use today's interest rate, then I'm going to pay today's price. And
Bingo.
I thought that was a
Beautiful.
really good way of phrasing that. So yeah, and that's
I
what
love
you
that.
said. Sellers.
Yeah, exactly.
Give me
I
two
think there's
percent,
a
2% seller financing. I'll give you like whatever you want for the property,
yeah,
right?
exactly. Yeah, you give me 2%, 30-year fully amortized. We're in. You named
Yeah,
the price.
yeah,
Oh, that's so amazing. So I love the attitude. I love the opportunity. You're not saying it's easy. You never have. You said for a long time pencils were down, nothing worked. We got receipts. But now's the time to do the work. Now's the time to get educated. Now's the time to, it's getting interesting. I still think we're in the third or fourth inning of
yeah.
this, so we're not even halfway. But
Yeah,
yeah,
I agree
it's
because
time to
there's so much property being held off the market now because people are waiting for better times. And also there's so many people who
yeah,
still are anchored to yesterday's prices. I mean,
correct.
I saw this in 2011 when I got
Me
into the
too.
business. People were still anchored to the 2008 prices, and it took a while for them to start getting realistic about where pricing was. And listen, I just want to say something about this. Another thing just popped into my head, which is that, you know, the cap rate on a property is not just a function of the interest rate, it's a function of perceived risk, right?
Correct.
Perceived risk is a function of like cognitive bias, right? So after the great financial crisis, when interest rates dropped dramatically, right? Cap rates stayed high because people perceived a lot of risk, right?
Correct. Yep.
Because even though the risk wasn't necessarily there, they had just been through a traumatic event with a huge market crash and a lot of foreclosures. So even though that had already happened and the risk had been taken out of the market, they still perceived the risk there, so they demanded a higher cap rate. If we start seeing foreclosures, the same thing is going to happen here, where
I
we
agree.
may well wind up with lower interest rates and high cap rates, just like we had 13, 14 years ago. That's a great time to be buying, by the way, right? But it could happen, right? So you won't necessarily have lockstep, lower cap rates just because you have lower interest rates if the market perceives there to be a lot of risk.
I love it. Jonathan, where can people find you?
Come to LinkedIn, and follow me there and reach out with a request, and I'm happy to connect with you.
Thank you. Thank you very much, Jonathan. A lot of fun. Take care. Have a good week.
You too.